Okay, what's up, YouTube? Hope you're all doing fine. We're live yet again. So let's get this. We just have got like 6 minutes before open. So let's get this, eh? Okay. Think everything will be good. Okay. Second. Oh, sorry about the creaky noise of the chair. Let's change that soon. Okay. So we're here on the weekly chart. Uh, we don't have much to work with right now because most of our targets have been reached on the weekly chart. What I'm looking at is nothing else but the high, the previous week's high, right here. That is what I'm looking for as a drawn liquidity here on the weekly chart. What else do we have on the weekly chart that they could use? There really is nothing else. Yeah, the high of the previous week. That is what interests me. We could drop down to the constant encroachment of this week before we start heading higher, but there really is nothing else. The weekly chart, I'm going to drop down to the daily chart now. Okay, dropping down to the daily chart, since we are so deep in the weekly inversion fair value gap in here, I would give more attention to the daily and 4 hour inversions. I would give them more attention, which in this case would be right up here. So long term, this is right now what you're looking at. Long term, if we can reach above this, first you look at this, and most likely, that. So here's my thought process. So if we can reach above this, we are going to most likely reach up into this inversion from the daily up in here. I'm using that as a drawn liquidity. Not I'm not saying price will reach there and shift, or I'm not saying price will reach there and keep going higher. We don't know that yet, but as drawn liquidity, once we move above the previous week's high, that could be a really nice drawn liquidity. This up here, the daily inversion. Mm, this fair value gap, that would be the next after this high, but I don't want to mark it out just yet. What else? This is getting a bit messy. I'm gonna get rid of that. Uh, Nothing else, really nothing else. We have also taken the previous day's high. I'm gonna drop down to the 4 hour chart. Dropping down to the 4 hour chart, we have got this huge inversion right in there. I really like that. Closing above that is very significant. Very significant. We could reach down back into that. Reaching down back into that would also mean reaching back into this new week opening up high. And then we could use that to bounce up into this daily inversion fair value gap up here. But I'm not holding any ideas right now. We're just going to get in, mark out everything that we have, and then we're going to go to the lower time frames and start observing. Okay, on the 4 hour chart, what I would actually like to do here is, yeah, to see how many new opening gaps are tucked in here. I'm gonna turn it off and on right in here. So that's significant. While I do that, I also want to mark out this low, the event horizon, which is from this right here, up right here. Dots, simple line, turn that off. Okay. What else can I use on the 4 hour chart? What else can I use on the 4 hour chart? There really is nothing else I can use on the 4 hour chart right now. This is too big for me to mark out this inversion in here from the 4 hour. That's too big. I don't want to mark that out. Yeah, I'm gonna go down to the hourly chart. Okay, dropping down the hourly chart. Things get a bit more clear. Give me a second. New pane. Candles. Okay. Both ES and NQ have taken the previous day's high, and we've got an SMT up there, and as up there, I mean on the high of the day, and yep, nothing else. Okay, what I want to mark out right now here is would be this. See that constant encroachment of this in here? I'm looking at that, and also I will also just notice this range here. This huge range, yesterday's huge range. I'm just going to notice where equilibrium is. Equilibrium is at the low of the weekly inversion fair value gap. That's where it is. Okay, I'm just going to keep that in mind. So if price shows us willingness to go lower, that is a really nice price point to look. 15-minute chart. Okay, these lows have been hunted. The highs of this whole range in here, this whole shenanigans, that was accumulation. Both the high and the low have been taken. And then what did we do? We traced back into the what? The equilibrium and into actually the premium of the leg that took both sides of the market. I'm just going to keep that in mind and keep this here. What else do we have in here? What else can I use? Okay, if we move above this high, that is the telltale sign that we are going to reach up into this high. If we can move above this Y, see this here, this tight movement, that is the accumulation. All this is the accumulation, and this high being taken, this low being taken, that is the manipulation. But the distribution, if it stays below, you see this inversion in here, right in here, that we just reached up into. If price can stay below that, it can reach back into the equilibrium, which is down here. But if price obviously shows us it can close above that in there, you want to look for this new coupling gap, this new coupling gap, the previous week's high right here, and then eventually we're going to look for this up here, this daily inversion fair value gap. But right now, you don't want to hold any type of that type of idea. Just hold on, and we want to drop down to the lower time frames before we marry any type of trade idea. Okay, now I'm going to mark out the cycles, the 90-minute cycles. The one that starts at 7 a.m., at 8:30, and at 10 a.m. And using a different type of line for 9:30 open right there. Okay, really nice how this is the 7 a.m.'s high, the 7 a.m. cycle's high. So what does that mean? That gives us even more confluence. Trading above that, we want to see PD arrays that are created around in here, taking this high. You want those PD arrays to be strong enough to keep sending us higher. Otherwise, you don't want to be trying to see a movement up into here and up here. You don't want to be trying to do anything like that unless you trade above this and show willingness to keep moving above it. Why? Because this is the previous cycle high. And really good, the other really good sign is the fact that the previous cycle low, it has been hunted. And I would also mark out this inversion down here. Why? That is the range, the leg that took the sell side, the accumulation low. This is the leg that took that sell side. And the lowest inversion, you want to mark that out. Previous cycle high. Taupe. Blue. Mm, what else would I use? Cycle slow. Okay, I'm gonna drop down to 1 minute chart. And in here, we'll mark out this inversion. Okay. Yeah, I'm gonna make this But get this a bit lower, this huge one. No, 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 no. I would actually include this. But this is huge. See, this one is huge. You just want to keep your eyes on this inversion as well. But this one is what I care about. Okay, so this fair value gap in here, that is not our first presentation because it was created at 9:30. You want to wait a bit more to you. eh, Any fair value gap that's created at 9:30, you don't want to use that as a first presentation, but the ones that are created after 9:30, that would be your first presentation. Looking at this inversion as well, previous cycle high. So Reapers. Yesterday, you guys showed me how I marked out something similar to this, and once we closed above it, I took a long when we reached back into it. But this one, I wouldn't use it the same way I did because they are not the same thing. They're not the same thing, really. They're not the same exact thing. Because why? This is not secondary accumulation. This is the smart money reversals accumulation. See that? Yeah. So this is not the same type of Reaper that I used to take a long yesterday. It's not the same thing. See how we are reacting from it. It's not the same thing. So I'm not going to use that. But closing above it means something. Mean that builds that helps me build an idea to take any type of long. But I wouldn't use it as a long as soon as we close above it. That's what I mean by that. So yeah, what else do we have? On the 5 minute chart, you see this SMT, this highs, this high, and this high, these two highs with ES. That's kind of lovely. Why? Because when we see, so that SMT, what is that? That's one PD array. The same way you see fair value gaps and you call them PD arrays or order blocks and you call them PD arrays and you don't want them to be broken just like that. When you see that happen to an SMT, you that shows you that we want to go against it. We want to go away from it. So that's why I was saying that's what I was trying to explain before I took it. When it takes it, you want to start seeing us trade away from it energetically. So I'm going to go to the 1 minute, but again, I'm not going to use that when we retrace back into it. I'm not going to use it. I'm just going to wait for 9:45 for something solid, a bit more solid to be given to me. And I'm going to use that for any sort of longs. Oh, Cloud, what's up, dog? What's up? Hope you're having a great day. Hope everybody is having a great day. I'm good. Possibly we could have the first presentation in here. And I wanted to mark this out. This is our initial drawn liquidity. Our initial drawn liquidity is this new coping gap here. And then if price shows us that it can start moving above that, the previous week's high, that is our next drawn liquidity up here. Text previous week high. And for news, I want to check that again. I know that we have 10 a.m. news, but I want to check that again. Yeah, at 10 a.m. ISM service PMI, services PMI coming in. That could get a bit energetic. Okay. Now we just wait. First presentation right there. So what does that mean? The first presentation and this Reaper in here. Reaper ILVG. The previous cycle's high. So many PD arrays. You see that? not just one PDRA. We have got a Ripper, we've got the previous cycle high, we've got the first presentation. They're at a very common range. So you don't want to see price close below this range in here. You would want to see price staying above it. Even if it comes and closes below it, you don't want to shift just yet. You would just wait for it to get closed above. So that's a really nice type of strong layering of PD arrays. It's a new coupling up high. We've closed above it, reached down back into this candle's high. What is that? That's an immediate rebalance. That shows us that price could leave this as a breakaway gap. I'm not saying I'm not saying it will be, but it could. It could. But if I have certain criteria, there are times that I say, okay, I want this to be a breakaway gap, and I want to enter, for example, at the new opening gap high. There are times I say that, but this is not one of them. We could most likely really easily reach back into this. Hope my audio is audible. 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 It's audible, not audible. It's audible. Okay, now we're waiting. If we could, if we're trying to see if we can get some sort of bullish video race in the next 5 minutes. There you go. First presentation. We just reached back into it. I really want to mark it out, but it could get a bit messy because there are a lot of things marked out here. Let's see. So I always use very light blue for first presentations and certain fair value gaps. First stop presentation. Account. Try to run it. Okay, you really don't would not want to see this get inversed. What that would actually tell me is, you see this range from this low to this high, that was delivered really fast, really fast. And right at equilibrium, we have got this fair value gap. So closing below that could mean we could reach down into this, and I really don't want to be in a short. I really don't want to be in a short. So I'd rather wait. Nice reaction from the first presentation right there. Nice one. Next target, right in here. The new opening gap. And actually, another thing I would like to do is this is the previous week's high. I would mark out this inversion in here, right there. This is from May 29. This is from May 29. Extend to the, nope, extend. No, I'm not going to extend it actually. This is the highest inversion for value gap. So trading above this, so that is really the easiest drawn liquidity, if I would say so myself, for price to reach up into. If you keep on going, that would be a very easy target. Even if it doesn't want to reach up into the previous week's high, and price wants to start accumulating in the daily range in here, if it wants to move back and forth, it will most likely, it could most likely reach into, it usually most likely reach into this inversion up in here. Okay. If you back into the first presentation right there, the way the first presentation was created is very crispy, very nice. When price gives us such fair value gaps being created, taking previous cycle highs and everything, that makes the narrative a bit much more easier to work with. It makes it a lot much more easier to work with. Okay, pretty below it, could potentially close below it here. Okay, yep, we just closed below it. What does that tell us? We are currently in a sell program. So we don't want to be, we really want to see price close above the first presentation now. If we are going to take any type of longs. Okay. Now, can 945 show us a willingness to close above this first presentation, or does it stay below it? Just like I said, I'm not even if price shifts from here and starts going straight to this low, I really wouldn't care about catching a top here. I I'm not here to do that because that my model doesn't allow me to do that. But here, if it can close above the first presentation, I will get right in there, put my stop loss right below the 945 candle, and look for a trade up into this new opening gap. That is if it can close above that. It didn't, so nothing for me just yet. So what else am I looking at right now? This week in here. That's basically this week's constant encouragement. That's basically also the high of the first presentation. So if we can close above both of those PD arrays, I'll get in right there and put my stop loss right at the low of the 945 candle. But I'll need to see this candle close above the first presentation. I'd say it's about to do so. Yep, it just did. So I've got my limit order right there, above, right at the constant encouragement of the 945's the 945's candles constant encouragement. And my take profit at the new week opening gap in here. So that would be the trade I am willing to take because why? It is perfectly according to my model. I have no other reason for me to take this trade. I'm only getting in because it's perfectly according to my model. If it doesn't take me and starts running, what is that? That is life. That's part of trading. And I'm not going to chase price trying to get in. Because why? I have got a very small stop loss. Chasing price is like the perfect killer for especially for my model. So that just tagged us in. Where's in the trade? Got in specifically where I wanted to get in. Didn't miss it by even a tick. That is copy traded across 3 accounts. Yeah, I am on the right account, hopefully. Yep. Yeah. Okay, so now we're looking for a new high to be formed above this high. And if we could possibly reach up into the new week opening gap in here, up in here. Okay, hitting the high of the new week opening gap that we're currently trading around. We've got a new opening gap above price, above the high of the day. So that's something to look out for. But macro starting in about 1 minute. The 950 macro, that is. We're trading the high, so we just hit the high of the current new week opening gap that we're in. That's where we are getting the resistance from. Okay, it's trading back into the first presentation right there. If even this stops me out, I know it's just perfectly according to my model. It's just part of the hit rate, so that gives me peace. That's why I'm very okay with taking losing trades. That's getting energetic below the constant encroachment of the first presentation. That's a telltale sign could stop us out right here. But again, that is that's good. What's good, brother? That's again uh perfectly according to our model. That just stopped us out. That was the first trade of the day. That was traded perfectly according to my model. That took us out right there, right at the low of the first presentation. I mean the Reaper in the first presentation. Now we just wait to see if at 10 a.m. Now that shows us we have shifted. So what I'm looking for right now is this in here. That is basically the equilibrium of this range in here. That range equilibrium goes right there. So you would want to see the low of the session to be right here if price wants to keep on moving higher. And also notice the 950 macro opened up here, right? It's opened up here, and it quickly started moving lower into equilibrium. I see that as one program. The macro just did one specific thing. He just did one specific thing and nothing else. So I would expect us to run up back above this. I'm not saying I'm going to take a trade right there, but I would expect us to trade above that and close above the first presentation again and keep moving up into this. I'm not saying right now I'll take a long because I will need a bit more from price in order to do that. But that is what I would look for here. That trade perfectly. So my hit rate, for example, if my what do you call it? Win rate is 50%. That is part of the 50%. I didn't lose that trade because I got emotional and entered the trade. That's just perfectly part of my mode. It's perfectly part of my mode. There's nothing that's that is there's nothing that I've done that is out of the mode. A low being created below this one more time would be cool. I'm just saying it would be cool. I'm not saying we need it, but it could be cool. Now, right now, I'm just waiting for 10 a.m. The 10 a.m. news. If at 10 a.m. we could possibly close above the first presentation, that would be a long. But at 10 a.m., when 10 a.m. comes, if we're still below the first presentation and 10 a.m. shows us price wants to keep on moving lower, that would be when I would shift looking for a sell side delivery if that happens. What did I say? If we stay below the first presentation at 10 a.m. and if we're still below it because we have taken the previous cycle's high, the previous day's high, and everything, if we're still below it at 10 a.m. and at 10 a.m. we get PD rays to take shorts on from, which are bearish PD rays, that would be the sign that I would look for to take any shorts, trying to look for at least a trade down into this low in here, at least that low. So that is what I'm looking for, and that's what I'm waiting for. But I don't want to be positioned in anything before the 10 a.m. news. So we really don't need the Reaper right now. Why? The first presentation by itself has now become our Reaper inversion. That is now our Reaper and also our first presentation. What does that mean? The first presentation is way much more stronger now. It's a way much more stronger PD array than just a first presentation for value gap. Now taking this low again would be a bit nice. Just one more time. That would be nice. I'm not saying we need that. I'm just saying it would be nice because that what that would do is it would clean up everything and everyone else that is left in any type of trend short from here or longs liquidity down here. That would clean up everyone before the move higher begins. But I'm not marrying the idea that we are going to go higher. I'm not doing that. I'm waiting for just specific things to happen. Love the fact that we also have an inversion in here, a possible inversion if we can close above that in the first presentation. So that would make it a bit more stronger. News coming in, 2 minute and 50 seconds. We are right now, all we're doing is we have cleaned out all these loss down here and we're just accumulating, waiting for the news. That's how I see this. When we accumulate right before a news, that's how I would wait for it. That would be my thinking process. Just coming in in 1 minute. Nice in the first presentation. Okay, very energetic, very energetic. Now you want to be very careful in this. Just like I said yesterday, when we have huge wicks, this could possibly have a very huge wick. So that's also an S70 with ES. Let's see how this closes and everything. I really don't want to short anything here. Why? You guys, I know how small my stop loss is. I know how small and tiny my stop loss is. Even if price wants to keep on moving lower, there is a huge gap here. You see that right at 10 a.m. we got lower, boom, and it the high of the we have no wicks up here. The hourly chart, the 15 minute, the 5 minute, there are no wicks here. So you just better be careful in here. Be careful and look out for at least around 40 more minutes in here before we take any trades. That would be much more uh, uh, conducive, better way of trading. If we just wait for whatever price wants to do in here to be done with it, because it most traders here is where most traders will be chopped off, will get chopped off. Trying to catch a short here, it's gonna stop them out. Trying to catch a long here, it's going to stop them out because it could get into a range in here before it starts going higher. You just want to be vigilant and just wait as much as needed. Obviously, for me now, what's obvious? This gap in here, we're gonna get back into it. That's very obvious. That's the most obvious thing there is right here. But what I want to see is what do we want to do after we into this gap by 10:15. That's what I'm trying to see. Notice we've got an SMT with ES down here as well. So if this is a market maker model, this in here, if that's a market maker model that could reach us up into all this, the buy side and everything, if that is what it is, it would we would not want to reach back into down to this level. We wouldn't want to do that if price wants to attack this. So I'm just waiting for 10:15 right now. I don't want to take anything here just yet. Even if this just goes 100 more handles lower, I'm okay with it. Why? Because it's not part of my model to take any trades in here. It's just not part of my model. Okay, that's nice. We just closed below the week's constant encroachment. I still don't want to take any shorts. From there, I don't want to take any shorts because my stop loss would need to be right here. And I won't really be very comfortable with that type of thing. But we are going to most likely use that and start going lower for this if we are to do so. If price wants to keep on moving lower, look out for this constant encroachment. because we just closed below it. There we go. Now, next, you want to be looking out for this. So, okay, now I'm just going to wait for 10:15, and if we get bearish PD race there, I would like to be in a short to attack the sell side, possibly if at 10:15 we get PD race that could keep on sending us lower. That is the only thing that interests me right now. What does that mean? I have shifted into looking for lower prices because of what we just saw in there. Possibly we could be reaching down into, if the continuation lower goes, keeps on going on. Possibly we could be looking at a reach back into yesterday's range, which is down here. See this low, that high down there. I think the 15-minute, that's completely balanced. Okay. So along the previous text range, just down there, that low, that high. Yeah. So we just reached that inversion that I have marked out. I want to see how we react to that in here. See this inversion. I want to see us close below it. We have gotten every reason to look for a trade down into here, down into the equilibrium of the range higher from yesterday, that is. So yeah, we only can wait now. Wait for 10:15 so that we can get our PD race at 10:15. Then I'll use that for shorts. That is the only thing I'm looking for right now. Exactly, that is the only thing I'm looking for, nothing else. You don't want to once what this is what old me used to do. So you see me taking that losing trade, right? So I was talking about how this could get us going higher. I would have used that to be in a buy, trying to catch a move higher. You could have found me doing a lot of nasty things, and I would have my trading day would have already been done on a losing on a, being a losing day because I couldn't keep myself. That was the biggest problem I used to have. Once I take a losing trade, I couldn't sit down and wait to get something obvious. Because you see, for example, this here move higher, or initially in the session, I was wrong. What I was looking for was wrong. It was disqualified. But now, because I waited enough. I can now now price has shown me that it wants to reach down into this equilibrium down here, and I would have not have the chance to take any trades down into that. The time has not yet the trade has not yet been given to me, but because I would have rushed into other trades, I would have already hit my daily loss limit. That that was what old Yabsra, that impatient kid would have done. And that is miserable. That is not miserable because I had a losing day. It's miserable. It would have been miserable because I didn't follow my model. But now, just because I followed my model, not because that was a losing trade or a winning trade, just because I followed my model, I'm gonna be peaceful. I'm gonna have a normal day. That is what makes a profitable trader different. Have a losing day or a winning day. It's now losing money sucks, but it's I really don't there really is no difference for me right now having a losing day and a winning day. Between a losing day and winning day, I'm doing the same things after I'm done because I know I lost those trades just because it was part of my model. So that shift helped me so much in my trading journey. So I want you guys to notice one more thing here. This was the previous cycle's low right there. See that? That was the 8:30 cycle. No, I mean the 7 a.m. cycle. And also the 8:30 cycle. Why? Because at 10 o'clock we opened up a new cycle, 90-minute cycle. We have traded below two market cycles, the 8:30 and the 7 a.m. So right now, this retracement that shows us we are currently what? Not in a market maker buy model, but possibly in a buy program. So what you would want to see is you would want to see this range and equilibrium right in there. You would want to go back into this side of the leg and you want to mark out the inversion. If the inversion in here, see that little one, you could mark that out and look how we react to it. We are being very heavy above it. That's a telltale sign that could shift price, but you just want to hold. You don't want to do anything. You just want to be patient and wait. Okay. Hmm. Okay. Uh, I don't like this. You see this? I really don't like that. NQES wasn't able to trade below that low down there, but NQ was. I really don't like that. Why? Because we're having too much SMTs. Too much SMTs while we are going sideways. We're going sideways and we're creating too much SMTs. You want to be careful. Now, my model doesn't tell me to stop trading when I see that, but experience tells me we could possibly be getting into a hard market, a difficult market. Just notice that. That is just something to study. But my eyes, I see that was beautiful. Wait, why is it not here? This, you see how that was what I marked earlier. The bodies are still below that, just something to notice. I'm not saying I would take a short there, but I would notice that. And also, the fact that we took this low while we were when? Still in the macro. We were still in the macro when we took that. That's also significant. I would have really loved to take this low after the macro ended. Why? Because that could be the protected low that could bring shift. That there's an SMT here, and also there is, and also it was created at between the macro time, between 9:50 and 10:10. That that is something to notice. Okay, we just closed above this inversion in here, but I wouldn't say that disqualifies this inversion. Why? No, we haven't. I don't think so. Because there's also a CB in here. I'll just be careful. So now we wait for 10:15 to 10:17. If in between that time frame we get PD arrays that show us that we want to start going lower, I would take that as a sell. But I want to see that. Yet again, we just closed in this little inversion in here. You can take this off. Tadios. Yep, I'm Ethiopian. 4 hour BC. I really don't look into the 4 hour BCs, and I really don't look into it that much. I've already done my higher time frame analysis, and that's all in my head. But that if that's part of your model, props to you. Okay, you might be. That also, you see this right in, okay, right. That's not it. In here, I want to see price show me that it wants to start going lower in between 10.15 to 10.17. Unless I see that, I don't want to be in a short. But if I get that, I will be in a short trying to see a move down into at least this gap in here. That is very energetic. I don't want to use that for any shorts. I'll need to see a couple of more things. This is not showing me that I want to be in any trades right now. Okay, I'm giving it a second in here. Instead, what I would want to see is us to trade below that. My stop loss would be up here. My take profit would be down right here. But not yet, not yet. It's not showing me what I want to see. Yep, it just tagged me in. Now I'd want to see a trade below that. Yep, that completely qualifies my trade idea. Now, exactly, this also perfectly part of my trading model. Even if it stops me out, again, that's part of my model. Okay, now we'd want to start seeing some movement going lower, just like that. I don't know why my PNL is not changing right now. But I'm in a short right there. Wait, why isn't my PNL changing? Yeah, I really don't like how that traded lower that much and it retraced back and closed above that. I don't like that. But that's all just perfectly according to my model. I really don't like why my PNL is not changing right now though. Yeah, that is one. Yeah, that just talked me off. Wait, why did it just buy 2 times? Give me a second. I need to check that. It didn't copy trade it correctly. I think that's what happened. So we lost 2 trades right there. So I would just stop trading right there. When I lose 2 trades, I usually lose 3 trades, but I really don't like the market conditions right now. It is going against my model. So I'll just stop trading and I'll be back here on Friday. So that would be 2 losing trades. I would stop trading. I really don't like the market conditions. So I'll be back on Friday. So until we speak next time, be safe, you guys.